Quite a lot of economic data that has been feeding through. We saw the numbers out of Germany. We've had retail sales out in South Africa. We've been looking forward to the CPI numbers out in the US as well. And then on the other end, the corporate environment, corporate US, corporate South Africa is looking pretty strong. What do you think investors are focusing on right now? Corporate earnings, or do you think economic data is more important and more significant?
I think economic data must be fundamentally more important. You know, after all, if one just looks at the economy as a whole, that dictates the potential profitability of the corporate sector. And I think what we're seeing now is a downturn or a slowing in the world recovery rate. Certainly in the US, that's quite considerable. And in the European Union, I mean, Germany's GDP numbers were really worrying. And if you think that Germany is sort of the engine room for the whole of the European Union, that is quite concerning. From South Africa's point of view, it's also a big concern, because after all, the European Union as a bloc of countries is our biggest trading partner. So that's quite worrying from our exports point of view, and I think that companies here are going to be bearing that in mind.
Well, let's take a look at the South African retail sales numbers that were out yesterday. 2.2% year on year in June. Some said this is optimistic given the fact that we only saw 0.2% growth the previous month, but quarter on quarter, that's where the real number really creates quite a bit of worry when it comes to the impact on GDP, and then that feeds through into the overall interest rate scenario.
Yeah, you know, I think what that is saying is that consumer confidence is really pretty low. But the worst thing is it's declining, and that is really quite worrying. And it's understandable. You know, we've got unemployment at a record high level. We've got uncertainty both domestically and globally. And I think that this is really just saying new opportunities are declining. And so I think we're not going to get any sort of consumer-led push to our economy. And I know we've heard from government that this is where they expect it to come from. I don't think we're going to see that develop. So I'm very conservative in the outlook, and therefore I'm quite conservative in the profitability outlook for South African companies.
What do you make of Bidvest's move today to withdraw its cautionary announcement and turning down the offer to demerge its food business? Bidvest is down significantly today.
Well, yes, I think it's a bit of disappointment, because after all, it looked like the possibility of releasing 4 billion rand, and that would have opened up all sorts of new business opportunities, if there were new business opportunities. And I wonder if the board haven't decided to say, well, hey, where would we deploy this money? We've got a viable ongoing business, good cash generation, let's rather hold on to it. Wouldn't be too disappointed at that, but it does point to fewer investment opportunities for go-ahead businesses like Bidvest.
Would you say that Bidvest is a buy at this point in time? We know it is one of the favorites, and when you see aggressive movements to the downside like we have today, Ian, is this a buy for you?
Well, you know, I think I've got to temper it with something you said just a little while ago. See the JSE Aussie turning down again from 30,200, and that was the base of that previous range we had, between that level and up to 33,000. Now it's had two in the short term, two turn downs now from that level. That makes me quite worried, and I just think you've got to accumulate cash, because we could see a move to a lower level, a lower range developing over the next few months.
Well, speaking of cash, we've seen quite a few companies out with results so far this week. Exxaro coming out with its interim numbers, and also quite a nice a dividend that we saw coming through there. This cash on balance sheet trend that we're seeing, and then being paid out in dividends or share buybacks, do you think that's the right move?
Oh, absolutely. You know, if there aren't new businesses there to be taken and developed, and then I think give the money back to the shareholders. They put it up in the first place, and they're building up a record. When they need new capital, they can go to the shareholders and will say, we've been treated firmly, we're prepared to put up new capital. I think it's a very good strategy.
With regards to capex spend for the likes of Exxaro for the second half, they're looking at 4.24 billion rand, and we're looking at that increasing going forward to 7.15 billion rand. The right move, would you say, Ian?
Well, yes. You know, I think they're basically looking at their favourite business areas now: coal, iron ore, mineral sands. They're all very capital intensive, but what they're doing is investing in their future. And I think if we believe that there will be an industrial recovery worldwide, and it has to happen maybe a bit delayed, then they're placing themselves in the right place at the right time with capacity to supply future needs. Very good move.
Ian, also just taking a look at Northam Platinum, that company out, of course, with results in today's session. Headline earnings per share down quite significantly. And again, we're starting to see a very interesting story filtering through when the cost pressures are starting to mimic that of what we're seeing in the gold sector.
Yes, that is quite worrying. Also, they were hit by a 6-week strike. So, of course, what that did, it didn't necessarily push up the costs, but it pulled down revenue. And so that meant that their profitability has not reacted the way it should have. And I think that the labour movement should pay attention to that. The longer they go on strike, the fewer jobs are going to be created in the future because the companies just don't have the ability to do it. So this is quite an important and worrying sign.
Let's touch on Grindrod, also out with results. We saw the company posting a 42% decline in first half profits, and the same story that we've seen for quite some time, weak freight rates and the currency swings that we've been seeing. But also we're seeing overcapacity when it comes to ships globally. Do you think Grindrod should be focusing on the other divisions, which it seems to be doing quite well, like for instance the financial side of the business?
Yes, but relative to the total size of Grindrod, it's quite well diversified, but that's quite small relative to the shipping business. And I think they have to maintain their leading position in South Africa, and they've become a global shipping player. I think they were into the shipping at the right time, replacing and upgrading their fleet, and it's going to pay off as activity overall gets going again. It may take a while, but I do think it was the right thing to do, and I think that the payoff will come maybe in 3 or 4 years' time.